Welcome to Drill Down Earnings. We have the latest quarterly results from Tesla. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Tesla earnings, so interesting. I love covering this company. It's Q4 earnings from the company. And of course, we know how many cars they sold. They give us that number every month. But here's the information we got. We got that a few weeks ago. But here's what we learned about kind of what happened with the actual financial results for the company. The market expected sales of $27.1 billion and 77 cents in earnings. Instead, they got $25.8 billion. And only 73 cents in earnings per share. So this is what Wall Street would call a miss. But we want to dig a little bit deeper into the business, not just the miss or the beat, the actual numbers. So sales growth at this company has really slowed down to 2% on a year-over-year basis. And when you dig a little bit deeper, it's not just selling cars or selling cyber trucks, selling, Model 3 is a big part of the business, but so is energy generation of batteries and solar. And so is services. And so automotive sales were just 77% of revenues. Now that does include tax credits, which we're going to get to, because tax credits were a huge part of this business. And then we're going to look at a couple different ways in a little bit. But first, one of the biggest surprises here, and an upside surprise, was growth in batteries and solar up 113% year over year. I don't know what's going on with this business. I'm going to spend some time figuring this out because it's been really volatile at this company. And it doesn't really track what's happening with solar across the rest of the industry. So we're going to dig into this a little bit. But when the numbers came out, I think they were largely seen as a disappointment. As I mentioned, they missed Wall Street estimates, and yet the stock was up. It was up 2% after hours trading. Sold off initially, then sold up. And indeed, for the year, stock's up 104%. This is not a weighing machine. This stock is a voting machine, and people vote on how much they love this company, I think, apparently regardless of the results. I mean, here's proof. In the press release itself had a picture of a cyber SUV or a cyber 18-wheeler. They don't exist yet, and yet that's in the press release. Indeed, the big excitement in the press release was that they said next year they're going to start shipping their low-cost cars. But we know that Tesla misses just about every deadline they set. So you want to believe Tesla? Go ahead. Me, I'm a skeptic. Let's dig a little bit deeper here. So one of the things that we see happening is across the EV industry. There's this story out there that EV sales aren't popular, that people aren't buying EVs and they aren't buying hybrids. It's not true. Hybrids and EVs are growing in double digits in America, but Tesla sales are not. As I mentioned, Tesla sales down, 2 or 3% this quarter. The rest of the industry growing at a lot better clip. And I think that's the really difference that you see. What you really see is Tesla's shrinkage almost. Well, you see the EV market in the US growing. Now, in the conference call, there's a lot of concern about what was going to be said and who was going to say it. Would Elon Musk be on the call? Check this out.
2025 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history. Maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3, or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history. There is no company in the world that is as good at real-world AI as Tesla. I don't even know if it's in second place. You'd say, who's in second place for real-world AI? I would need a very big telescope to see them. That's how far behind they are. All right.
So there you have it straight from Tesla. I told you I'd talk about tax credits, and I want to give this just a minute because I think it's really important. Because we see Elon Musk, standing on the dais with President Trump, giving hundreds of millions of dollars to President Trump to run for re-election. And why is he so concerned about Washington? I'm sure there's a lot of reasons. And one of them has to be the tax credits that goose every part of the business at Tesla. Margins at Tesla in the automotive business were 18%. But if you take out the tax credits that they got, they were only 13%, a much less profitable business. And those are gross margins. In fact, if you look at the free cash flow, which is the ultimate measure of business, right? It's how much money is left over after you pay for everything. And the free cash flow is very dependent on on these regulatory credits. I mean, 3 quarters ago, it was all of the free cash flow in the business. And on any given quarter, it's somewhere between 20% and 100% of the free cash flow. So we're going to take one last look at this in a second, but that's sort of our look at what we get from Tesla in this quarter. It's promises about the future, not a lot of delivery here in the current. But what's your big drill down earnings takeaway? And one number that tells us a whole lot? Well, here it is. Tesla, fourth quarter earnings, 2% growth in revenue. Sales growth is really sliding here at this company, and it missed Wall Street estimates, whatever that's worth, but the stock rallied. But I think when you dig into the numbers, when you get into the cash flow statement, and you look at how much they rely on government handouts for free cash flow, in this quarter, and the one number that tells a whole lot, the drill down earnings bite, 34% of free cash flow was government handouts. Might explain why we see Elon Musk in Washington, D.C. do so much. Thanks for checking out Drill Down Earnings. I'm Cory Johnson. Check me out on X, @CoryTV. Follow us, @DrillDownPod on TikTok, Instagram, and of course on YouTube.